Well, Growers Edge, I think, has made us more money by allowing me to survey the local bids that I'm in the area that I want to sell my grain. The local elevators and the ethanol plants know that this information is out there, so they've got to be competitive if they want to get the grain. You know, we've been able to maximize our return on our farm.
Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is Friday the 28th for the weekly wrap-up. Let's turn over to the grain hedge trading platform and see where we closed off the day. Corn down a penny, soybeans trading up 6 1/4, and wheat in Chicago down 6 cents on the December contract. Let's look at some of the headlines here today. Keep in mind, EU announced earlier today that their forecast for corn is going to be lowered to 58.7 million metric tons from 65.5 million metric tons last month. Basically, they've had hot, dry weather during critical development time period, which has resulted in lower production for corn out of the EU. But keep in mind that yesterday we actually saw the International Grain Council increase their global wheat or global corn production. They did cite EU having disappointing production this year, but they were saying that was more than offset by favorable conditions here in the U.S. Also, out of the EU, they raised their soft red winter wheat harvest up to 140.7 million metric tons from 139.4 million metric tons. Now, this week, we have seen declines in prices, but that certainly helped out export sales for new crop soybeans. On Monday, we had 120,000 metric tons of new crop soybeans sold to unknown destinations. On Tuesday, 210,000 metric tons sold to unknown destinations. And on Thursday, 130,000 metric tons sold to unknown destinations. So very positive here, new crop sales. It's good to see because new crop sales really are running about 73% of what we typically see during this time period when you look at the 4-year moving average for new crop sales, cumulative new crop sales. So it's good to see that, and hopefully we get another good week of sales next week. Also, keep in mind, wheat here is really kind of the relatively weak grain in the grain complex. Unfortunately, Egypt continues to issue these tenders, and Russia and in Ukraine continue to win. Basically, with the crude oil selling off as hard as it has been over the last week, Russian ruble has also depreciated in value. The U.S. dollar here and wheat prices just continue to keep U.S. wheat outside of away from being competitive on the global market. So that is one of the key driving issues, I believe, for wheat's continued slide in prices. Now let's talk a little bit about the Planalytics yield forecast. You'll notice Planalytics came out with their, every 2 weeks they come out with a yield forecast. This is based on the NDVI index. That's the greenness index. And they have a way of kind of calculating and estimating the overall yield at the end of the year. And you'll notice for corn, they have decreased their corn yield estimate down 0.4 bushels per acre to 166.8 bushels per acre. Last week they were 167.2 bushels per acre. The USDA on August 12th was 168.8 bushels per acre, and then Pro Farmer, when they went across the Midwest with their scouts, they estimated on the ground there of 164.3 bushels per acre. So I think what we're seeing right now is a little bit of a decline in corn yield. I think this is why we get a little bit more strength out of corn than we have been seeing out of soybeans. We'll talk about that in just a moment. But take a look here at the summary. Basically, Planalytics was saying that the U.S. corn crop continues to make its way through the grain fill time period, and about half of the final yield has already been locked in on the cob, and that recent warm temperatures across the Midwest are causing much of the crop, particularly in central and eastern part of the grain belt, to mature at a fast pace, which will continue on through next week. So this rapid maturing is likely to result in the lost yield potential in eastern corn belt states due to the poor stalk and root quality, whereas yield potential in the western part of the grain belt continues to remain robust under those conditions. So basically, it seems as though those warm conditions, a little bit dry conditions in the eastern part of the grain belt causing rapid maturing, and that's going to take a little bit of the yield potential off. One of the reasons why they revised their yield forecast. Now, when you look at the yield forecast here for soybeans, you'll notice that it has increased. They went from 45.9 bushels per acre on the 12th of August up to 46.2 bushels per acre. That's an increase of 0.3 bushels per acre. And now we're getting more in line with the USDA estimate on the 12th of 46.9 bushels per acre. That was confirmed on the ground by Pro Farmer when they toured the Midwest with their scouts and came up with a national average yield of 46.5. Now, of course, that is all projected, but what you're seeing here is really a lot of different confirmation. You have USDA looking for a 46.9 bushel per acre yield. You have Planalytics, which uses greenness and satellite imagery, and you have Pro Farmer, which actually walks the fields, takes samples, and estimates a national average yield. And what you're all getting is somewhere in the 46s, with NDVI index and the satellite imagery being on the lower end, and Pro Farmer and the USDA being on the upper end of the range. When you look at Planalytics' summary of this, they basically said that favorable August weather has continued to improve the prospects of the 2015 U.S. soybean crop, which is well into the grain fill time period. Overly wet conditions in Illinois, Indiana, and Ohio and Missouri that stunted the crop early have given way to warmer, drier weather patterns in August, which was just what the crop needed in those states. Solid potential continues to be maintained to the west, Iowa, Minnesota, Nebraska, and South Dakota, while the risk of any major yield-robbing threat appears to be dwindling as the crop begins to mature. And so this was one of the reasons, this is their summary for the week, with the reasons why they increased their yield forecast for soybeans. So in general, I do believe soybeans is likely to continue to have relative weakness in the grain complex. I think wheat will continue to show weakness in the complex. Corn, I think, though it may decline in weeks to come, I think it will be relative strength in the grain complex. Now, this is a Friday, and we typically talk about the cash market. So let's just take a look and see where we have changes across the U.S. in the cash market this week. Let's take a look at soybeans first. We were down 4 cents on average. The Gulf increased 9 cents this week, but the river did not have that same sort of increase. It didn't participate in that gain. It was actually down an average of 7 cents. So that's a pretty big deviation between the Gulf increasing and river markets increasing. They actually declined on the week. Now, plants closed with an average of a 5 cent decline, but there were double-digit gains that were fairly frequent across the U.S. So that is kind of interesting. It shows that there is a little bit of a deviation between plants. Some plants still trying to lock in supplies, while other plants seem to have most of their needs met. Then when you look at the corn basis, we did increase on average 1.5 cents across the U.S. The Gulf was up 12 cents. River market did appreciate, but some of those barge rates actually bit into some of the river terminal increases. The river on average was up only 4 cents this week. Other than that, guys, that wraps up today's show. If you have any questions about what we talked about, please give the office a call. The number is 877-472-4607. Have a happy and a safe weekend. We'll see you back in the office on Monday.